On your top three things today, in my notebook, global macro, top three things. Japan is number one. Number two is deflation. And number three is Switzerland. And again, we're not going to talk about the fine central planning folks who are at Davos. Now, first on Japan. Last night, central planning night for the Japanese. And Kuroda basically says, look, my inflation target, not going to hit it. So he cut his inflation target to 1% for 2015. We've showed this over and over and over again. It's in slide 8, actually. If the team has it, they could pop it up to show you the monetary math that the Japanese are trying to achieve. So in other words, they're burning their currency so that they can get some kind of monetary math. In other words, inflation. And again, if they can't get the inflation, then the policy to inflate is not going to work. So them cutting their inflation forecast is basically an admission of defeat. Now again, what happened on that was the two big trades that have been going the right way for the Japanese central planners went the wrong way. The yen, in other words, went up on that. The Nikkei went down on that. I'd be very careful with those two positions in particular. They've been working for quite some time, and we're less confident, at least until April, which is of course the next central planning meeting for the Japanese that people will definitely be prognosticating ahead of. Now, point number two. Deflation. Deflation. If you can't see it in the oil price, obviously you can see it now. But again, in the commodities index, the CRB commodities index, 19 commodities in that index, it hit a fresh new low, as you can see yesterday on the chart. And again, that's crashing. Just again, a crash is greater than a 20% peak to trough decline. And again, when inflation expectations peaked last year, it was June. The CRB index peaked in June. Break-evens peaked in June. Tips peaked, again, they all peaked at the same time. And then the rate of change in expectations for inflation started to become deflationary. So again, deflation, you can play in a lot of different ways. Deflation's bad for commodities. It's bad for the debtors with bad balance sheets that are linked to commodity-oriented cash flows. It's good for you, the consumer at home, who's taking that as a benefit at the gas pump. So again, this makes for a very good long-short setup in global macro. Probably the best long-short setup that I've seen really since we started the firm, which I think in 7 years is saying something. Now, finally, in Switzerland, you do not want to be long the Swissy stock market. That stock market, again, collapsed on the central plan. And again, the central plan didn't really work in equity market terms. You'll recall that last week you woke up to the Swiss stock market down 7-8% on the day. Then they bounced it. You can see that bounce to a lower high in the chart and now back down 2%. So again, the problem here is that the Swiss stock market to start the year is already down 11%, and it has no immediate term support on the Swiss market index down to 76.80. And again, if you can pull up a chart there, you can see that that is a long way from Kansas, and my name certainly ain't Toto. So those are your top three things. Now,